Today's topic is cash flows, and it's prepared and presented by Mr. James. Okay, first we will look at the definitions. These you ought to know before you start getting into the cash flows. Cash flow, by that we mean the total funds or money that is paid into and paid out of a business. Cash flow projection, we're talking about a forecast showing the sources of cash and how it would be spent. Okay, so what you have is a forecast. This is something that is for the future. It's not about the past. So you are projecting into the future your sources of cash and how you're going to spend it. That is what a cash flow statement does for you, or a cash flow projection. Cash itself, we need to define what we mean by cash. I've not seen this pointer, so I will just let me change this pointer. Right. What we mean by cash is right. What we mean by cash, cash in hand. We talk about cash in hand, petty cash and so on. Cash at the bank, and what we call near cash items. Okay, near cash is items that can be changed into cash speedily or quickly, and it includes short-term deposits and investments. So if you deposit an amount at the bank for, let's say, 6 months, anything short-term that is within a year time that you can get quickly, you could go down to the bank and get cash for it quickly. That is near cash, and it is included in the term cash and cash flow projection. Okay. Investments, short-term investments are things like the unit trust, mutual funds that they have there. You can go down to the mutual funds and you can get your money anytime. Okay, so those are cash or near cash. And near cash is sometimes referred to as cash equivalent. Okay, so let's get into the business. Types of cash flow. First, we have inflows, and inflows come from cash sales, receipts from credit customers. That is when your debtors pay you. Sometimes the owner might introduce some capital, and you might get grants from governments and so on. And so, if you sell some of your non-current asset, or if you take a loan, so that we have other income from other sources, dividends and interests and so on that we might receive from the bank or from our short-term investments. Okay, so these are the sources of cash or cash inflows. Okay, now we have cash outflows. That is where we pay out money for purchases of goods. For sometimes we pay our suppliers, then we pay for expenses, utilities, and so on, rent and rates and telephone and water and what have you. Then the owner may draw out some, and we might buy non-current assets and repay loans. And people who invest in our business, we might pay them for their investment in the form of interest and dividends. So this side should be the opposite of this side here. Okay, now we're looking at what the cash flow projection itself is. Forecasting cash flows is a key element of forward planning. So it's part of your planning for the future. If you do not plan short-term planning 2 or 3 months ahead, usually you would not know where your business is going to go or where you want it to go, right? You become like the proverbial horseman. You jump on your horse and you ride off in all different directions. You can't really do that, right? Predicting cash shortages will enable arrangements to be placed to be put in place when the bank business for an overdraft facility. If you run out of cash, you would know that it's approaching. You'll be able to make arrangements with the bank to get overdraft or borrow a loan or something like that, right? If you check your sources of cash before, then you would know where cash surpluses is coming from, and it put you in place to make better use of it. All right. If you have excess funds, excess money, cash, you can make some extra investments and so on. But these things take planning in advance, right? If you fail to do that, what would most likely happen is your failure for liquidity problems. It will cause what we call liquidity problems, and you would not be able to find yourself being able to pay your workers or pay your creditors when their debt is due. Right? If you do not plan your debtors properly, what is going to happen is your debtors will not pay you on time, and you would not know how your cash is flowing into your business or out. So that's the importance of the cash flow projection, right? Now, we want to look at what the projection itself look like. Then, following that, we will have a work example. Okay, so this is what your cash flow projections look like from month to month. We have a 3-month projection here, right? You would put in a column here the cash inflows, all your sources. We just saw a number of sources there. If you have those in your business, you list them off here and put in the amounts where and in the particular month that it is coming. At the end of all your inflows, you have the total. You will add them down here and you will get the total. Then next you will have your outflows or your payments, and you're going to pay out for all your items here. You're going to list it, what you pay for and what you expect to pay for. And it would be the same thing again. You put the amounts in the under the month column in the relevant month, and you add it and you get a total here. All right, now you take this total here and you minus this total here, and you'll get a net inflow or outflow. If the inflows is greater than the outflows here, you will get a net uh, inflow, and it will be a positive figure like here. However, if the outflow, if that means here, is greater than up here, then you will get what you call a net outflow or a deficit. Okay, and you would want to put it in brackets so you can identify that this figure is greater than that figure up there. Okay, and at the bottom here we have our opening balances. Usually this is a actual figure coming from our uh, previous period. the actual amount of cash that we have, and we will take the whatever we get here, the net, and we'll add it on or minus it if it's outflow from our opening balance, and we'll get our closing balance. Okay? And the next month, after we have put in all our projections here and add them and minus them and get the net here, the closing from here comes here. Okay? And we will now add this figure here. In this case, we will minus it from this figure, and we'll get this figure. Perhaps it might be a negative figure again, our outflow. And this figure now will go over here as the opening balance for here. Okay, now we have to get this mechanics correct, right? Otherwise, our whole projection could be messed up simply because we transfer the wrong balances across. Okay, and we do the same thing here. Then our inflows, add it up. Then our outflows, add it up, minus the totals, and we will get the net inflow or outflow, and add it out to the balance brought forward here, and we will get the balance carried forward or the closing balance. And so it just a little bit of rocket science, and you have it. Okay, so that's a note on the side to remind us negative figures are shown in brackets and they represent outflows, right? Cash outflows exceed cash inflows, there is a negative net outflow, right? At the end of the month, there is a negative cash closing balance, right? That's talking about this month here, month two, and a negative cash opening balance for the next month. So this is going to be coming across here. All right, so you have what is a comprehensive example here. In your exams, you can get up to 6 months of these, right? And you gotta be careful transferring the balances across. Now you can have other sources, more than 2 sources, as we saw. We can have up to 3, 4, 5, 6, any number of sources here that the examiner wants to give you. Right. So let's move on to a work example and see how some actual figures look like. Right. Preparing our cash flow projections. We have Catherine owns a furniture store called Home Choice. She prepares 6 monthly cash projections. Okay, so she does a 6 month basis thing. She has provided the following forecast for each of the 6 months leading up to the 30th of June. And he gives us here in condensed form a nice table showing our sources and our payments, right? And we have to do the cash flow statements from this. Before we go into the actual workings of it, let me say you don't always get your information in a nice table like this. Okay? Sometimes you get it in a paragraph form. If you look at your past paper and you see how you get information, sometimes they just put things all over the place and you are supposed to select and put them in their appropriate columns and things like that. All right. So this is what your finished product should look like. The home, a proper heading, home choice, cash flow projection for each of the 6 months to 30th of June 2019. And you have the months at the top. On the side, you have the cash inflows and the cash outflows, right? And then we have each type under here. Then we have the net cash outflow and the opening balance. Let me show you how we build this up. You start first with 1 month, January, and you put in your stuff on the side here, all your inflows, and you get your net total. Take your total here minus the total here. Notice 9,900. Take away 9,600 is 300, and it's positive, so you had a net inflow. All right, this means that the cash that you receive from your cash sales and your customers, you didn't have any other source, was able to pay all the bills and so on for the month, all your running costs, and of 9,600, and you had an overflow of 300. You bring in your opening balance. This comes from the previous period, right? And you add this 300 and this 1,400, and you get this 1,700 here. This is how much money you would have on hand when you close off the month of January, or on the 31st of January, you have this amount of cash. Okay. Then what you do next, you add on the next month for February. You just put in your thing. Now this is done before February starts. Okay. As a matter of fact, you may prepare all 6 columns in December of the previous year. Okay. So we add it on again. We get 9,900. This time 9,900 is greater than 98. So we get a deficit or an outflow of 100 here. We expecting that in February our outflows would be greater than our inflows, right? Now we will notice that our balance brought forward could handle that. All right, so we don't need to borrow. So we wouldn't make arrangements to borrow anything. And when we bring forward our balance here, it more than cover this deficit here. So we have 1,600 remains, right? So add on another month, and we will keep going like that. We put in our sources of cash, add it up, all our payments again, right? Now this is a regular business, right? So wherever your sources of cash is coming from, and what the things that you pay for should be fairly stable every month. Is only rarely you might find something popping up in here in the payment, like one of your machines might break down and you might need to buy one or something, or your vehicle might crash and you have to go and buy a vehicle or something. Okay, but that is a rare occurrence, and you will have to get a separate line for that. Okay, so we'll add it down again, and this time we get 1,200. Again, we could see that our balance brought forward to cover our deficit here, and so we will not make any arrangements to cover this. We cover it from the 1,600 brought forward, and we still have 400 to carry forward into the next month. And so April, we'll do the same thing again, right? We go down to 1,300. This time, the 400 cannot cover the 1,300. Okay, so we know in advance, because we remember we are doing this thing from, okay, just give me a little break here. I see Akil Chase has joined us. Welcome, Mr. Chase. And you have to contact, haven't contacted me about your SBA, and the deadline has already passed. Okay? You are in danger of being marked as a non-submission. Okay? So whatever it is you have done so far in the SBA, you try and submit it to the date. Okay? You can continue working on it if you want afterwards, and if CXC doesn't require the marks before you are finished, you could submit it again, okay, and get some extra marks. But we need to submit something, otherwise administration is going to put you down as a non-submission, okay. I got from Lancaster and I got from Francois. I haven't heard anything from Jonathan Sugrim and Mr. Chase here, even though I sent out emails to them on numerous occasions. I got no response during the vacation or last week. I even contacted their parents through the Educate and I didn't get any response. So, gentlemen, if admin put you all down as non-submission, you only have yourself to blame, okay? CXC had originally said they were going to give you a month extra, and then they backpedaled and they took back their month. Okay, so make sure you all get in your SBAs before the end of this week, otherwise you could face. Um, all right, and I would suggest that whatever you have done so far, you send it. All right, we're getting back here. The 1300 is greater than the 400 that is coming forward. So you cannot cover it here. So you have to make arrangements with your bankers to borrow some money or for overdraft facilities, right? Bear in mind that this projection is being done sometime before January here, right? Sometime before January, perhaps in December the previous year. So you know well in advance that this is coming, and you make arrangements to borrow at least $900. Right. The next one, we go through the same pattern again. We put in our receipts from the credit customers and our receipts from cash sales, and we add it up. Then we have our payments that we want to make for the month. We will add them up again. And then we take this and we minus this and we get a positive figure again. So, but this negative figure that is coming forward from here today will knock it off and you end up with a zero balance here. Okay. And now we have the final month, June, where we go through the same process again. After this, sometime in June here, we need to make a projection for the next 6 months. Or if you are doing your projections in 3 month period, you need to do it in 3 months. So you will know where your sources of cash is going to come from and who you're going to pay and how much, and make arrangements for uh, your shortages or outflows, net outflows of cash. Okay, gentlemen, so that brings us to the end of the presentation. This, mind you, is one of the new topics that you have on. Right.